Hey everyone, it is Jamal the Broker. Welcome back to another episode of Roots and the City podcast, now live on YouTube. I so appreciate you being here. If you're catching the episode just in your ear holes today via the podcast, welcome to you too. Happy to have all of you. Today's video is going to focus on the 10 steps to buying a home. What goes into buying a house? Where do you start? What do you need? Do you have savings? Do you qualify for a down payment assistance program? Who knows? Step one really is coming to the table with the realtor to have that discussion and see where you're at. The official step one for this video, though, is going to be planning your finances. When I'm thinking about finances and real estate and your real estate journey, I've got three categories in mind. It is 1, your down payment, 2, your income, and 3, your credit score. These three things are going to come together to help us get a really good idea of your overall buying power and strength in the market. So your down payment could range anywhere from $0 down to over 20% of the offer or list price down. And don't assume always that you can get a down payment assistance program. While those are helpful, and come on, grants, free money, for example, any kind of benefit to help us get through the door is awesome, but they're not all created equal. So working with your realtor and your lender, you can kind of compare those oranges to apples and see what's going to work out better for you. When it comes to your income, they being the lenders, are going to want to see a consistent income for about 2 years. This doesn't necessarily mean you have to be at the same place of employment for 2 years, but they want to see a steady stream of income coming in. You don't have to be salaried to qualify for this. If you work, at a fitness studio, or if you work in retail, anywhere outside of the traditional work model, as long as those hours are consistent and those dollar amounts are consistent and you can show that, lenders and banks, they can work with that. The other piece being your credit score, we have to do some homework there. If you're sitting in the 620 range, that's going to be really good. Lenders can work with the 620, and the higher your credit score, the better your interest rate and financing options will be. You'll have more options. And while you can find some financing with a credit score in the high fives, your interest rate might be a little higher, and there might be some more kind of red tape that goes into financing your home loan. Another piece with the credit score, and this is just being 100% honest and coming from what I have heard from other lenders that I work with in the market here locally, if you're sitting around the 740 or higher range, that's really, really, really good. And you're probably going to have some really awesome options out there available for real estate financing for you as it pertains to your home loan. So overall with your finances, how much total? A lot of people are looking for a number, right? How much do I need to have saved to get this thing started? 3% on average is what we would tell somebody for a down payment. And that's just keeping in mind various loan types, right? So an FHA loan, for example, their lowest down payment is 3.5%. So if we can come in with at least a 3 to 3.5% down payment, that puts us in a pretty good position on the down payment front. Now, the other piece of the savings would be an additional 3 to 4% for your closing cost. Things that go into closing costs would be like your title and lender fees, any prepaids like inspections, appraisal, those types of items could go into closing costs. Now, we are in a seller's market, so by default, a lot of buyers, I should say, would take on the closing costs. But in my personal experience, all of my clients, we've been able to either have those costs covered or split those closing costs. It really depends on your unique situation, the house, your offer, It depends on your transaction. It's really hard to compare your neighbor's transaction, your papa's transaction 20 years ago to what's happening with your unique situation. But in my experience, that cost has been covered through negotiation, or it's been split also through negotiations. So overall, I would think if you have a good budget in mind, again, not what the lender approves you, but before you get to the lender, an idea of what you want to spend, 6 to 7% of that list price, or that offer price, we'll say. So say you want to buy a house for $200,000. 6 to 7% of that, just put that number in your head. That's about what you should be saving just to have on hand for the transaction and to get you moving. Moving on to step 2, you are going to want to hire a realtor. This is important, especially as a buyer, because if you find a home that you're interested in, that seller is probably working with an agent who has been trained to negotiate against you in a sense. Really, they are going to be negotiating for their seller's best interests, which would be really hard for them to do the same thing for you. So you want to have someone in your corner that can do the same thing from the buying side. This person is going to stand up for your contract, the things you're asking for, and really help guide you through the process. And also having 2 real estate professionals working with you, one on each side, helping the clients, it's really a much smoother situation because, again, these are trained professionals in the real estate field to help you get to the closing table. We don't want you to not get to the closing table. So make things easier on yourself and hire a realtor. Do not be afraid to sign an exclusive buyer agency agreement. Now, there's been a lot of things in the news, especially around real estate the last few years and the updates. This is a legal document that lays out your relationship with the agent, and it spells out exactly what they're going to be doing for you as your representation as the buyer's agent. And also, it's a way for them to say, hey, I'm working with you and you're working with me. You're not working with anybody else. You've got me. I'm in this with you. A part of that is going to be a fee that they work for. Now, historically, sellers in the past, and I say historically because real estate's been a thing for over 100 years as far as the operation of the business goes, the seller side would take care of both agents. Now, these updates that came out with the exclusive agency and buyers potentially having to pay their agent, keep in mind that brokerages and other MLSs have been operating this way already. Moving forward, now this is just legally, this needs to be set in place in case there's a scenario where a seller does not want to cover that fee. And it's really adding some transparency for you as well. So I'm working with you, buyer. If we're saying, for example, going to see a for sale by owner, and they're not necessarily wanting to pay an agent at all because it's a for sale by owner, but we go and look at that house, we can always ask for that buyer agency fee coverage, and they might be open to covering that fee for you because you've come along with representation and you're actually able to get through the transaction. So again, brokerages, agents, other brokers and MLSs, work with your team member, and your team member being your realtor here. I get so used to saying team member, especially when we're talking about lenders and realtors and how we work together. So be working with your realtor to understand the ins and out of that contract, because the realtor and your representation, they're going to be working per that document for you, and everyone signs on it. So just don't be afraid to do that. It's part of the process. It's protecting you as the buyer. It's also protecting the agent as your representation. And really, the market's still been moving and grooving. So if you have any other questions about buyer agency, be sure to check out my podcast, Roots in the City. We dig into that a little bit. Or shoot me an email at hello@JamalTheBroker, and we can dig more into that. So when you're looking for an agent, you want to find someone who is familiar with your area or your desired area. For example, in Indianapolis, there's a ton of neighborhoods and subdivisions. Indy is a very spread out place. So, do you want a realtor who's more familiar with the west side? Do you want a realtor who's more familiar with downtown, with the north side, or maybe some of the happenings over on the east side? Dig into what you're looking for as you start to think about what you want in your real estate story, and try to find the agent that's going to best fit that mold. Also, if you're a first-time home buyer, definitely look for an agent who is comfortable and familiar with working with first-time home buyers. It's, for most people, it's the biggest transaction of their lives that they will ever make or be a part of. So you want an agent who is very comfortable with leading you through that process step by step and advising you in a way that is educational and is protecting you as well. The next step would be to get pre-approved. So a pre-approval, most lenders can do all common loan types. So conventional, FHA, VA, some are even doing USDA loans. A good way to connect with a lender or a bank is to just talk to your realtor about their connections. Most of us have people that we've met and we enjoy working with, or we can connect you to people that might have programs that could help your real estate story move along in a way that's very beneficial for you. We love to save clients money and get them free money where we can, but all lenders don't offer the same products. All banks don't offer the same products. Some people may be competitive, some may not be. But ask your agent, because they can kind of put you on the right path with one to a few contacts just to kind of get you started. So another way to connect with some financing would be a mortgage broker. A mortgage broker, unlike a lender, they can kind of take your application and shop it around to the various products and see what options are out there with a very I would say a broad overview. They're taking your application and they're seeing, which puzzle is this going to fit in the best for the client. Where some lenders, they may or may not be able to explore options that way. Of course, there's local banks and credit unions, and there's also online lenders. In my personal experience, it's been awesome to work with the lenders and the banks that we have here locally. So it might be the same story wherever you are. So whoever your realtor is, if it's not me, pick their brains about who you should go and interview, who you should research or dig more into their programs. They can guide you that way. Now, lenders, they're going to want to see a few things from you. And I always prep clients, when we're getting pre-approved, it's going to feel a little intrusive, but that's because the lenders are going to want as much information as they can get about your finances and that financial history to put you in the best position possible. So lenders are going to want to see a month of pay stubs, 2 years of tax returns, and they're also going to want to see 2 years of W-2s, 1099s, and your 2 most recent bank statements. They may have additional questions. It just depends on your unique scenario. So don't be alarmed. They need this information so they can help you get across that finish line. If we're not willing to share the information about our finances and they can't figure out if we can make the mortgage payments, we're kind of at a standstill, right? So don't be too shy answering those questions. Of course, always communicate with your realtor. We're a team, lender, realtor, client. And if there's any uneasy feelings or questions, I always welcome questions or feedback. So communicate always. But the lender is just trying to get as much information as possible to help get you the best product possible. The credit pull situation, a lot of people are nervous to do a credit pull with lenders because, oh my goodness, my credit's going to get hit. It's going to go down some points. And while that's true, the credit pull, a hard credit pull, where they actually go in, they pull your credit, they check the different bureaus, it's probably going to decrease your credit score maybe 5 to 7 points. There are some possibilities with lenders to do a soft pull where they can kind of gauge a general range of where you would land based on the information you've shared, your credit score, and they can kind of tell you a number to kind of start a soft search. Okay, this looks this way, so maybe be looking at homes between 250 and 3. Whereas if they did a hard pull, they can give you exact numbers and say, hey, this is it. This is your range. How do you want to move forward? So don't be afraid of those credit pulls. Once a lender does a credit pull, you've got a good 45-day period where other lenders, say like 1 or 2 more lenders, if you choose to check out all the options your realtor shares, within that 45-day period, your credit, it's only going to be hit once. So again, that 5 to 7 points. And within that 45 days, let's just say 3 lenders can be looking at your information, and we can compare those lenders and products to see which is the best and which one we want to use. So again, especially if you're a first-time home buyer, a lot of this will feel unfamiliar. It might seem and feel a little confusing, but we are here to help guide you through all of this. So ask us questions and don't be afraid. We've got you. Once we are pre-approved, we are going to move on to step 4, which would be start house hunting. So step 3 was getting pre-approved, and step 3 is so important because I don't even want to start step 4 until we've been pre-approved. And this, I say this and feel this way because say we are out, we've signed our agency agreement, we've hired a realtor, you've hired me, we're out looking at homes and you find something you really like. It's everything you've been looking for. It checks all of your boxes, but you haven't been pre-approved yet. But there's 2 other people looking at it. You see people coming into the showing as you're leaving. The listing agent communicates with me, your realtor, that there are offers on the way. And we're in a position now where we just have to hope. We just have to hope that an offer is not accepted by the time we are pre-approved and ready to submit an offer. So if we have a pre-approval going into a home search, we're in a much better position because if we find that unicorn of a house, we need to be able to move immediately. And it's just going to put us in a stronger position because, hey, Mr. Seller, an agent, here's my pre-approval along with my offer, not an offer without a pre-approval. And then the seller is wondering, okay, they've offered this much, but we don't have anyone vouching for them that they can actually qualify for that. So we want to get pre-approved and then start the house hunting. You need to make a wants versus needs list. This is very important. I don't know if any of you read my name tags ever, but one of my jobs is expectations manager. It all starts with managing the expectations. If we can focus on the wants and the needs list throughout the process, because we're going to see hopefully not too many homes, but if you are on a longer search, or let's just be honest, a more chaotic search where you're kind of bouncing all around, you're not really sure which direction you want to go, and you're seeing things here, you're seeing things there, and you're being inspired or turned off or whatever, this needs versus wants list is going to keep us grounded. And yes, I'm saying us because as the agent, we need to be listening to you and really putting you across the thresholds of homes that line up to this list as accurately as possible. Now, realistically, we're not going to find everything right off the bat. That's why it's called a home search. It's a big bonus if that happens for you. You find everything you're looking for right away. Or who knows, maybe you're getting into a new build scenario and you can just put everything in as the place is being built. But that list is going to keep us grounded and focused. And it's also going to help us realize maybe there's some things on the list that we can live without or add later, or maybe there's something on there that we discovered we absolutely really need to have. So make that wants versus needs list when you're starting your house hunting. You should not need to tour a lot of homes because most of the time, now keep in mind, people, this is not HGTV. No one's rocking the block here or loving it or listing it here. This is a very real process and situation. So you should not need to see a ton of homes before you make a decision. Because you've got that wants versus needs list, you've gone over a budget, you have an idea of what you want, you've had a buyer consultation where your agent has talked to you specifically about what you're looking for and what you need, how the real estate is going to work for you. And really, it should not take a ton of homes. Now, there are some cases where the search goes longer, and that's fine. But if we're seeing 30 plus homes and nothing's clicking, we might need to have another consultation. All right, on to step 5, making the offer. So you found the house. This is the one. We want to move forward with an offer. While some homes, some, not all, are sitting for a little longer than people are used to, and I say that because a lot of sellers, a lot of buyers, and even some agents are still used to the pandemic market where things are just flying off the real estate shelves. Just because a house has been sitting for 2 months doesn't mean that something's wrong with it. Also, there are some homes that are just a little shinier, especially if they don't need a lot of work done and they're priced really well. Those homes are going to fly. So regardless of the house and how long it's been sitting, if you are interested in that house at all and you feel like you might want to make an offer, don't wait too long. It's happened to me a number of times. We go and see the house that's been on the market for 80 days, 65 days, and then suddenly there's multiple offers. So if this happens, you're in the house, you're really feeling it, you've taken some time to think about it, don't take too much time, especially if it's one of those super turnkey ready homes, because even sleeping on it could cause you to miss that opportunity. And not everyone accepts a backup offer. So you want to be the first one in if you can, or at least be part of the initial bunch with that batch of offers. So sellers typically get, when you submit an offer, they typically will get 24 hours to reply to that offer. And there's 3 things they can do with that. They can accept the offer, so they like your terms, they like the number, we're good to go, we're moving forward, signed, sealed. They could reject it, just flat out reject it, which means that does not mean you can't submit another offer, but rejection is an option. Or they can counter. And actually, real estate education for you, a counter is a rejection, but I call it a soft rejection because the conversation is still going. I always say that to clients. Submitting an offer, starting a conversation. Of course, you want an accepted offer and a really good conversation, but a counter extends that conversation. So they might like all the terms on your offer except maybe the closing date, or they might want a different dollar amount, or they might be they might be wanting something else adjusted in the agreement before they accept it. So 24 hours, I think the quickest turnaround time I've done for a client, and it worked, was just one business day. So the following day, it wasn't a full 24 hours. We just gave them until the next day at like 5 p.m. And that worked for us. An offer can be crafted however you need it to be, and your realtor will keep you on track. So it's a good, strong offer too. Once the offer is accepted, we are on to step 6, which would be your due diligence period. Your due diligence period is the time span within the offer that you get to do your home inspection and get those reports and respond to them. So your due diligence period typically would be two weeks, so about 10 business days. I've seen them go about 1 week, like 5 to 7 business days. It really depends on your offer and what you're trying to accomplish. And again, if you're looking at terms and the length of time for a due diligence period is one of those items that could make your offer stronger. Whatever that number is or that you want, discuss it with your realtor and they will advise you accordingly. But typically in my market, 10 business days, 7 to 10 business days would be a good inspection period. If you're working with me and we have an accepted offer, I'm getting the inspection scheduled the next day so we can get that report and respond to it within the set times that we've laid out in our purchase agreement or offer. A home inspection is an overall health report. A lot of people can get freaked out when they receive a really beefy inspection report. I've received inspection reports that were 5 pages, and I've received inspection reports that were 95 pages. It really depends on the house and what is on the list too. Inspectors are trained generalists. They are not specialists by any means. Some, not all, but most of them are generalists. They're not going to be your roofing specialist. They're not going to be your electrical specialist. They're not going to be your foundation contractor. They're giving us an overall health report of the home. This is an education moment for us. It's not to freak us out. We are learning about this investment that we are taking on. What needs to be fixed? Are there some projects on this list that absolutely need to be taken care of before we move in? Or is it a bunch of maintenance items that you're going to have to tend to anyway as the new owner? We want to take that due diligence period to work through all of that. Your realtor will go over the inspection report with you. Typically with me, anything that's not working properly or is defective are good things to ask for on an inspection report, but we'll get to that. Other types of inspections that you might do on a home that are separate from the general home inspection would be a radon test, like natural gases, potentially cancerous gases that are coming up from the earth. Air quality test, lead-based paint test, mold, and these are all a la carte items that you can put on your inspection order. So general in Indianapolis, typically a home inspection is about $450 to $500. And then the radon, the sewer scope, the mold, those things, any special tests outside of the inspection itself are going to be add-ons. And that again would be part of your closing costs that you're thinking of saving for. Inspections, any potential additional inspections you might need to do based on the inspection report findings. And also don't forget, you want to get home insurance. There's going to be a section on your purchase agreement or offer that says you need to get home insurance established within so many days. And there's various types of home insurance, and it's going to vary based on where you are in the country, right? So if you're in Florida, you might have to have hurricane insurance. If you're on the West Coast, maybe earthquake insurance. Fire, there's flood zones here, a lot of flood zone areas, so you might have to have flood insurance. Your realtor should know what kind of insurance that property would require. So look at your search and talk to your realtor about any additional coverage you might need. All right, now we can move on to negotiating the repairs, which is step 7. And this is going to work similarly to us submitting our initial offer. So we're going through the list. Let's not say it's 95 pages, but maybe it's somewhere in the 10 to 25 page range. I work with a lot of older homes, so I'm used to seeing thick packets when I get my inspection reports to review with clients. Again, nothing wrong with that. It's a health report. It's not meant to scare us. But like I said moments ago, working with me, I advise buyers anything that's not working properly or is defective are good things to ask for on a inspection response. Your realtor will let you know how many days you have to get that response in after the inspection. And then once you send that response over asking for the items that you would like repaired or replaced, whatever, the seller is going to have the same kind of three options that they did with your offer. They could accept all the repairs. They could reject all the repairs, just say, no, we're not doing that. Or they could counter the repairs. And you just go from there. Hopefully you can have a good discussion and you work through that. I'm confident that you will, especially if you're working with me. And you get one step closer to the closing table. Now, I will say this area that we're entering in the home buying process and these steps, inspections are one of the most stressful and scariest parts of the transaction. And that is just because potentially some of these projects could cost thousands and thousands of dollars. I mean, personally speaking, just for example, I had a seller earlier this year, and by no fault of his, it was the community, the builder community who built these beautiful homes, beautiful community. But some of the properties were missing a type of wrapping under the siding, a specialized siding, Hardy Boy siding. And that cost us, 5 figures out of their proceeds. So some inspection items are really scary, but working through the repair list and what you want fixed with agents on both sides, trained professionals in the real estate field, hopefully you can work through whatever those items are. And everybody's comfort level is different, right? I mean, we have some people out here just buying homes and not doing inspections, which I would never recommend, but it happens. So everybody's different. On to the next piece of the process that is one of the scariest and heaviest, and that is step 8, the appraisal. Appraisals are going to be ordered by your bank or the lender, and this is to protect them, not you. The lender is taking a chance on you, so they want to make sure that they can protect their investment as well. So the appraiser is going to go out to the home and make sure that in the appraiser's eyes that the home is worth what the offer, the list price says it is, because they're not going to lend you more than what the appraiser says that home is worth. Appraisal outcomes, you can get lucky. It comes out right at the list price, so everything's fine. Say that the appraisal comes back over the list price. That's a nice bonus because maybe you get some built-in equity and some extra dollars to maybe negotiate more with your lender for more closing costs or other items that could help you out in the transaction. And then the other outcome could be, what if it comes in below the sales price? Well, hopefully if that happens, say you're like $5,000 to $7,000 short, that appraisal is under that amount from the list price or the offer price. Hopefully the seller would just kind of adjust and come down to that amount, but that's going to depend on your negotiations with your realtor and the realtor on the other side. In most cases, sellers would just kind of make that adjustment because, hey, it appraised at this amount. In other cases, people are more prepared with appraisal gap coverage money. So a buyer could be taking additional money outside of the transaction to say, hey, we're going to cover that difference. No problem. It's written into the contract for up to this amount. So if it's short $5,000, we'll just give that to you at closing. So those outcomes could vary, but appraisals are very scary because it's more dollars in discussion and in the balance, right? So a perfect scenario would be that the appraisal comes out to match the offer price or potentially go more and higher than that price. One last note on appraisals. So I had another scenario with a buyer earlier this year, and we had an appraisal snag, for lack of a better term, because none of the appliances were in the house. And the appraiser came and there was no stove, there's no microwave, there's no refrigerator. And in order for an appraiser to get that value of the home, they need those kind of basic appliances in there. So that was my first time kind of receiving a rough kind of verbal appraisal. And then they actually had to come back and do an appraisal again when the appliances were installed, and they gave us a true appraisal amount. If you're working with an FHA or VA loan, they can be more strict just because they just want their buyers to be coming into a property that's safe, it's sound. They're not going to have a ton of things that they need to worry about off the bat. So if there are repairs that are called out by that appraiser, those repairs may need to get done, and then that appraiser will return to make sure that the repairs were made, and they'll present an appraisal number. Now, on to step 9, which is the final walkthrough. So a final walkthrough is basically for us to ensure that all of the repairs and the repair requests have been made and taken care of. And also, we want to make sure that the house is still in the same condition, or if not better than it was when we made the offer. So this can happen usually within 3 days of closing. I like to go the day of closing or the day before. I've seen realtors go the hour before closing just to kind of make sure everything is in place before we sign papers and trade keys. And that's totally normal. You can personally check. I always ask for receipts. I'm always on the property to do the final walkthrough, whether my clients are there or not. I send videos, and the receipts just prove like, hey, the seller did what they needed to do. You can't argue with the receipt and a timestamp that the repairs and the requests were taken care of. You could also do a re-inspection too. Usually at a discounted rate. You can hire your inspector again, and they will come out and check out the property and make sure that they see those positive changes and updates on the repair front. And now the very end, the happy ending in step 10, the closing. So at closing, you're going to sign a ton of paperwork. So do your wrist stretches depending on which hand you write with. Do all of your stretches before closing, and don't forget your photo ID. Very important. So you are going to be reviewing and signing your closing disclosure, which is going to highlight all the line items of the transaction. Typically there's 2 to 3 columns or more in some cases, just showing the debits and the credits on both sides, the buyer side, the seller side, what money's coming back, what money's going out. The closing is also going to be where you take care of any cash to close that you need to bring to finish the transaction. Now, keep in mind, working with your team, your realtor, and your lender, throughout the whole process, you are going to be communicating about these things step by step. You should already have a general idea of the cash to close that you're going to need to bring. If you need to bring anything, in some cases, you could receive a refund. Again, it really depends on your offer, the house, your unique real estate scenario and story. Closing is a very exciting and happy time. And then that is it. If you've made it to this step, you have successfully bought a home. And woo! Do you still have your wig on? Buying a house can be a super emotional roller coaster, and more than likely your agents and brokers will turn into counselors and confidants for you, whether you're on the buying or the selling side. It's a huge deal. You will be tired, you will be exhausted, but it will all be worth it. And you would have received this wealth of knowledge in real estate that you did not have before. And you can go into this new home and property feeling very confident in your next step as a homeowner in this journey. So if you are not already working with a realtor in Indianapolis, hi, it's me, Jamal the broker. Please feel free to reach out. I have my contact information in the video notes and in the show notes. So please be sure to check out all of that contact information. And I also have surveys that you can fill out if you're interested in buying a house or selling a house. fill out those sheets. There's some required answers just so I can share that with lenders with your permission. Because if you're serious about starting the process and learning more, again, we just want to set you up for the best options and overall experience possible. So feel free to give me a buzz at Jamal the Broker or give me a call, and I can start to help you with your home ownership journey today. If you have any questions or want some more details about any pieces of the conversation that we've shared today, please leave me a comment, shoot me a text, write me an email, and we will go from there. All right, y'all. Thanks for tuning in today, and I will talk to you soon. Bye.